Thank you for having me.
Thank you for being here. So this is my buddy Mike Campos. He is an incredible lender here in Boise, Idaho, but he is also licensed in every state.
Every state, we're a national mortgage company.
That's amazing.
Yeah, so it's very normal to help a customer do a transaction and pull cash out of their existing property somewhere else.
Yeah.
And then bring that money here into Idaho.
Which is pretty important. There's just so many people relocating. I was a relocation from California, so
Ditto.
yes, so that's definitely going to come in handy that you can help
Absolutely.
people.
And you know, we've gone through it, right? Mm-hmm. You know, from the logistics of packing,
So much packing.
to the timing of packing, and to some things you don't want to pack. And it was just an exciting experience for a new chapter moving to this area. And it's, I don't know about you, but I feel very welcomed here in this area.
Oh, my goodness, yes. I remember before I moved here, everyone was terrified, warning me, you have to change your license plate right away, and don't tell anyone you're from California.
Yep.
Literally so much nicer than what I experienced back in California. So I came here, we moved in and we had the neighbors delivering pies. I mean, it was your hometown feel.
Good old-fashioned hometown feel.
Yeah.
Awesome. Yeah. And, you know, in the beginning, my first couple years, I kept quiet to where our family came from. But honestly, I'm pretty proud that I'm from California because the Californians that are all here, I believe came here for the same purpose,
They did.
right?
Yeah.
More of a wholesome living. And I think we're in it together.
Yeah.
You know?
Yeah.
I really do. So it's fun. It's rewarding.
Very
and the
cool.
natives here, they're all great. They're all good people.
Honestly, most of my friends have been born and raised Idaho.
Nice.
And yeah, I mean, it's wonderful. And every time I meet someone from California, we just give this cheers, like we got out of the rat race.
You did it.
Yeah. Awesome. So I thought it would be great if Mike shared with us maybe some common loan programs that you do,
Absolutely.
whether
Sure.
coming, relocating or here locally.
Yeah. Well, you know, I've talked to dozens to hundreds of people that move up from their next property. And nowadays, it used to be from neighborhood to neighborhood, and now it's across state lines. So it's very common for me to have strategy sessions with people and help identify the next step for them to move forward in their life. And a lot of times we're talking about a home equity line of credit on their existing house just to create some liquidity for an escrow deposit or staging and prepping of their departure home, just to get them liquid so they can write some checks and make some family decisions.
Yeah.
And then utilizing that line of credit, we oftentimes can use that for the down payment of their new house. Because in some cases, we have to buy the new house first and then eventually sell the departing home for a lot of different reasons. Whether that is the best strategy to get top dollar on the sale of the move-out house, or if they're like me, we got dogs and cats and kids.
Right.
It's impossible to herd that gathering out of the property to have an open house, right? So it was just as a family business, much easier to buy first, get everybody into the new house, and then vacate and clean up the old house at that point to sell.
That's awesome. That actually reminds me, so a lot of times when we're writing up offers, we can write an offer that's what's called contingent, which means my buyer really wants to buy your house, assuming that they will be able to sell their house. Sometimes that can make the offer not as strong if you're in like a multiple bidding war type of situation.
Right.
But I also know that there's programs that can kind of help with that as well.
Right, absolutely. So programs that can help with that, depending on the application, is that home equity line of credit.
Yeah.
And so we want the client to plan early because it takes about 3 weeks to get a line of credit. If it is at the last minute, we do have something called a bridge loan, which in essence is like a line of credit, but off of a different circumstance, last minute circumstance.
Yeah.
So we want to help our clients save money by doing the line of credit and keep the cost low.
Yeah.
And there's a little bit of a unique loan program that is for a current client that is buying in the same state to their next home, and that is called the cross-collateralization loan program.
Okay, wait, say that 10 times faster.
It's like you scripted this. I don't even. So the cross-collateral loan program is an old-school commercial real estate loan that they've now implemented into the residential loan arena probably about 6 years ago now.
Okay.
It's one loan, one payment, in first position on two properties. So it's kind of like a blanket loan. So if you have a $1 million house now, and let's just say you're buying a $2 million house,
Yeah.
the lender is calculating the loan amount off of $3 million.
Okay.
And so from there, as long as the client has significant equity in their existing home, they could potentially purchase the new house with no down payment. In exchange of having no down payment, we're putting a lien on the move-out house.
Okay.
It is a little bit more expensive of a loan solution, and that's why we kind of do it for more of the higher-end properties. But it allows us to move in first, sell the departing property afterwards, and by design, when the old house is sold, it automatically pays down the balance and gives the client a new monthly payment without having to go through the whole refinance exercise.
That's awesome. I mean, it sounds like you have at least 3 options depending on their timeline and their situation. That reminds me so much. What I've noticed since becoming a real estate agent is that so many people think they have an understanding of their financial situation.
Yeah.
And it's really incredible the amount of assumptions. I mean, and I speak for myself.
Right.
And I just feel like I'm saying the same thing over and over again, like, don't make any assumptions until you've actually talked to a lender.
Right.
Like, literally break the actual numbers down, the programs down. There are so many options and so many things. And even from the real estate side, I'm like, most of my transactions, I'm getting the closing costs covered right now.
Yeah.
So that's really popular, at least in Boise.
Yes.
And so there's, again, all these assumptions of like, well, I need this much to bring to the table. And I'm like, no, like, don't. Just talk to a professional.
Right.
And just see what your options are.
Yeah, because it's ever evolving, and a lot of it has to do with what's going on in the stock market. And some banks are kind of in the market or out of the market because once they get their fill of low-rate loans, they're kind of done.
Yeah.
And then some other banks are like, well, we need to really increase our P&L, so then they lower their rate to get more loans or reduce their underwriting requirements. So there's a lot of moving happenings all the time, and that's what my job is, right? So I'm not only studying what's going on with rates, I'm also studying what's going on about underwriting requirements.
Right.
And so as Chase or Wells Fargo or credit union have their inside the box solutions, outside lending sources are like, hey, I'll do the same thing, but make it a little easier, right? And just give me a little bit more interest rate, and we'll get the loan approved. And so there's lots of flexibility out there that we also do a lot of research on as well.
That actually reminds me of something we were talking about earlier with how you can do underwriting in the pre-approval
Oh,
state.
yes.
So there's a couple different things. You can get pre-qualified, which is a good understanding of your finances, but it's definitely, you want to get pre-approved if you're getting to that place where you're like, I want to be ready at any moment to write an offer, because people are going to want to see that pre-approval. But you guys take it one step further.
Absolutely. Yeah. We call our process the power bid. It's an upfront underwriter approval at the pre-approval stage. So, as you mentioned, the pre-qualification, it's usually just a telephone conversation, and you're pre-qualified. And, most good agents, they can smell a pre-qualification a mile away. So, we really, as an industry, have stepped up to the plate to pre-approve, where we're analyzing pay stubs and bank statements at the loan officer's desk. And that's a great pre-approval to plan and strategize and provide transparency to the client. But when the Boise market picks up here come summertime,
It's coming,
we gotta bring our A game. And so what we decided to do was underwrite the loan at the pre-approval stage, where you're getting a commitment letter from the underwriter, signed by the underwriter, which is basically the loan's done.
Yeah.
Right? At that point, the loan's done. We might need an appraisal. We definitely need insurance, title insurance, and to go through the traditional process. But the loan part's done. And so as a listing agent or a seller, it's like, hey, what's the difference between John Doe and Jane Doe? Well, they got a power bid approval. The loan's done. No risk. Let's do that one.
That definitely comes in handy a lot. As someone who represents a buyer, I've had conversations with listings saying, okay, well, yeah, but your buyer is on this type of loan or this financial situation. If I'm going to choose between A and B, they're going to choose the strongest offer, the one that tells them which one is the most guaranteed to close at the fastest and the easiest, smoothest way.
Right.
So it's really helpful as a buyer's agent when I can be like, no, like here's their lender information. They are underwritten, like everything's done, like we're ready
Right.
to rock.
Yeah, it's,
that makes it really strong.
It's a selfish sport, right?
Yeah.
The sellers only care about the things that you mentioned. So if we accept that
Yeah.
and adapt and strategize our loan process around how selfish a seller is, no disrespect to them, because I would do the same, but if we adapt to that, then our buyers are the strongest buyers on the street.
Yep.
That will provide the least amount of issues or drama to a seller. Yeah,
That's
so
awesome.
we want to put our clients in the winning position, because it stinks to not get the house you really
Oh
wanted.
my goodness. I know the amount of calls when you have to call your buyer and you're like, we didn't get it, and they're
Yeah.
like, not again. We have to keep looking for houses.
Right.
Yeah, that's really, man. When you find the one,
Yeah,
yeah,
yeah. And it's even me personally. So I remember just like for like a month, 2 months. I remember we're looking at properties for our family, and my wife would be like, "Well, it just wasn't the San Pablo house." And
Yeah.
it's like, yeah, we're never gonna get that house now. So it's like we know what that feels like, and so we want to avoid that the best we can.
yeah.
Definitely.
I have a current client. I've been showing them houses for a couple months now, but when they walked into this last one, just literally you couldn't, like, the smile.
Yeah.
And I was like, this is the one. She's
Right.
like, you just become so, it reminds me of when I was trying on wedding dresses.
Oh.
And I was like, wedding dress. And you just literally put one on and then you're like, why am I giddy? Why am I so giddy? You just
Yeah.
like the emotion takes over when you
Right.
find that house. Yeah.
That's the special part about it being a realtor. You know, you get to see all that.
Yes, it is a roller coaster.
Yes.
That's for sure.
Yeah.
Okay, that's awesome. So that's really helpful. We've talked about some like relocation stuff. You got your different loan programs for that. Let's talk a little bit about maybe some of the other loan programs. We have
Yeah.
FHA, VA.
Yeah, so the power bid, underwriter approval.
Yes, yeah.
We do that power bid approval for many different loan programs. You could be a jumbo buyer, a conventional FHA or VA buyer. And let me tell you what those are. So I'll start with the easy ones first. So FHA is a government-insured loan program where you only need 3.5% down payment. And they're forgiving about maybe not having perfect credit or having a credit challenge in the past, like a bankruptcy and stuff. So they're very forgiving, and at 3.5% down payment, it's an easy way to become a homeowner. And from there, conventional loans are also a government. It's from Fannie Mae and Freddie Mac, which is actually a government-owned corporation, and they have a 3% down payment loan, and of course, 5 and 15 and 20% down payment loan. And they offer a lower cost, not lower rate, but definitely lower cost loan program. And that is the traditional guidelines that we kind of see on the internet. And that's kind of like the standard, right? You know, that's a B plus or to A plus type client goes for a conventional loan. And then they also have limits to how much they'll lend you. Now, I don't know all the limits by heart right now because the new limits just came out for 2025, but you can do
Keeping you on your toes.
Yeah,
Yeah.
but you can do a 3% or 5% down payment at the minimum, but they have a limit to how much they'll lend to you.
Okay.
And so when you go over that limit, then we step inside of the jumbo loan arena. Now, a handful of years ago, there was only like 5 or 6 jumbo lenders out there that we all had to go to, and they were just super strict
Yeah.
and conservative. And it was a challenge to get those loans approved, but still very, very possible. Nowadays, we have dozens of sources that are bank and non-bank sources offering the same rates, but with just a lot of flexibility with
Yeah.
guidelines. And that's where I got to do all my homework. You know, what's Chase doing? What's Citi doing? What's the hedge fund companies doing? And they're offering the same rates, but their guidelines are different. But we can approve all of those types of loans inside of our office. And the last loan program I'm going to mention is for our military family. It's the VA loan. You know, that is probably your biggest benefit for serving our country.
So many people don't know they have these benefits.
Yeah, people are humble about it, to be honest with
Yeah.
you. But you don't have to have a super good credit score. You don't have to put a down payment. And it's the lowest interest rate loan out there. And on top of it, my company, because we employ so many veterans, we waive the lender fee. So you're going to get a low cost, low rate loan at no down payment. And whether you're buying at an expensive house or a cheap house, it is an excellent loan program.
So
That's
good,
the
yeah.
first program we want to put you in.
Yeah.
In fact, I'll tell you a story real quick. So a realtor partner of mine, is for her mom, and they're trying to figure out how to get mom to afford to buy this home. And so they talked to a couple different lenders, and all the lenders at the time were about the same interest rate, 6.3, 6.5, all kind of, presenting the same solution. So it wasn't unusual for me to get a phone call about this and then probably not have much else to say, really, in a nice way. But my first question I always ask everybody is, did you serve in the military? She goes, no, I didn't. But my husband did, and he passed away.
Yeah,
and
spouse.
I said, yes.
Yes.
I said, guess what? You're a surviving spouse. What does that mean?
Yeah.
I said, well, first
Oh
of
my
all,
goodness.
your interest rate just went
Can
from
you imagine?
6.3
Yeah.
down to 5.6.
Yeah.
And that was the difference
Yep.
between buying a house and not buying the house for that
Yep.
client. And so we funded a VA loan at the loan amount she wanted, at the payment she wanted, and it was just a total win. And she was so happy that I just asked a question that not a lot of people think about, And so we have to think about that because it is very common. I hate to, in a great way. There's how many bases there are in Boise? One base.
Yeah.
And that is for Air Force Reserves. It's a really cool jet reserve division. And so there's a lot of military here.
There is. There's
a lot of
VA
military
loans. Yeah.
families here. And we just got to make sure that they're getting those benefits because it's
Yeah.
a big win for them.
So you mentioned the word guidelines earlier, and kind of bridging a little bit between VA loans and FHA, just
Yes.
because I have my own little story.
Yeah.
I did an FHA transaction recently. One thing from the sort of real estate side is, especially with FHA loans, when in a normal convention you go through the inspection period and then you negotiate. The buyer says, hey, based off of the inspection, I want these to be either fixed or you can give us credit at closing and we'll fix it ourselves. And it's usually a pretty smooth process.
Yeah.
With FHA, then you have the added appraisal comes in and they bring in an FHA appraiser,
Right.
which you run then the risk of that appraiser flagging certain items of the house, typically like safety protocols,
Yeah.
where they say you have to do this, you have to repair these, or this transaction does not close. There's a
Correct.
lot more pressure.
Yeah.
So the FHA loan and the VA loan can be the thing that makes or breaks people's ability to even have a home. So it's incredible that they're there. It does come with needing an agent that's like on it, because there was a few things that happen. Like in the inspection period, normally I will itemize and list out very detailed based off of the inspection. Here's the exact things. These are our estimated costs that we think it's gonna. You want to come with the most detailed, strongest negotiation during
Right.
that process.
Right.
If it's an FHA loan, I do not put any of those itemized things on there, because if a lender sees it,
them.
now you
Yeah.
have to report it, and then
Right.
that could potentially now make more of a problem in addition to the appraisal, where suddenly there's just exponentially more things we have to fix or this loan doesn't close.
Right.
So there's a few things understanding that from like the real estate side.
Right.
And in this particular FHA, also my client was out of state for the whole transaction. So I was like, oh my goodness, if we have to fix all these things in the house and like they weren't even in town, otherwise they would just fix them themselves, and we had an option. But there was definitely a moment of slight panic of like, we need to be on top of it. I had all my contractors kind of on hold being like, are you available these dates if we need
Yeah.
to get in there and fix it? So I had everything ready to rock, and then the appraiser came back and didn't flag anything. And I was like, oh, easy peasy. Like I was very grateful for how smooth that transaction was. Yeah.
Yeah, good.
Yeah.
Yeah. So, in other states, there are things like termites and maybe earthquake strapping and things like that.
Oh, interesting. California.
Yeah. Well,
Yeah.
You see
Yeah.
where I'm going. But here in Idaho, we do have some things that we have to be aware of as well.
Yeah.
As you mentioned, health and safety is kind of one of the things. And so we go into some of these historic districts. You're looking for, loose railings and leaks and stuff
Yeah.
like that. But one thing that's also very common that we have to be alert about is wood touching dirt, dry rot.
Okay.
And so some of these structures sometimes might have a decent foundation, a concrete foundation.
Yeah.
But maybe over time the mud or the dirt's
Yeah.
kind of built up, and it being kind of wet here,
Yeah.
we got to just be alert about that.
Yeah.
Other than that, we've really seen some great properties. Now, if the property was too far beyond repair,
Yeah.
right, where
Yeah.
it wasn't like, hey, the seller's going to go paint the peeling paint real quick.
Right.
If it was something gnarly, have you heard of the FHA 203K loan?
Tell me more.
Okay, so this one's beast mode. So I love this loan. We did a lot of them in 2006, but basically the FHA 203K takes the FHA loan concept and creates a hybrid with a construction loan.
Okay.
Okay, so
Yeah.
check this one out.
Yeah,
So
yeah.
if the property, let's just say the property was really bad shape, like there's holes in the wall,
Yeah.
there's active leaks, maybe a missing sink,
Yeah.
like just whatever the bad
Yeah.
news was.
Yeah.
And so your client is FHA, they can't get a house like that, right? They
Yeah.
can't finance a house like that. So the FHA 203K closes escrow in as-is condition. And so the down payment is calculated off of the purchase price plus the remodel amount that has to be
Okay.
done through a licensed contractor.
Okay.
So all my handyman buyers out there, this one's
Right.
not for you.
Okay. Yeah.
But so, you know, for example, to fix the health and safety stuff, to replace the missing sink, whatever it might be, let's just
Yeah.
say it's $30,000 or $50,000, and let's just say the sales price was $400. So the down payment of 3.5% comes off of $450, the combined purchase and remodel amount.
Okay.
And you close escrow in
Okay.
as-is condition.
Yep.
The buyer gets the house keys, hands them to their contractor,
Okay.
and they go
It
do
gets
all the
done.
repairs.
That's
Yeah.
honestly so good to know that that's an option, because oftentimes when I'm helping with the home searching process,
Right.
if I see a home that's like open piping, I'm like,
Right.
ooh, that's not
Yeah,
going to
yeah,
be
yeah.
FHA qualified,
Move
but
on.
this
Yeah.
could be possibly
Yeah.
be an option for that. Yeah.
Absolutely. So, you know, some customers, you know, can't see past, you know, the photos or the initial
Right.
walkthrough. And so it's a move for them personally. But if a customer is like got a little bit of can see past that, maybe have a good vision of a design or maybe
Right.
entrepreneurial mindset,
Yeah.
you can close escrow and as is, send their contractors. They get to choose the paint.
Yeah.
They get to choose the appliances. There's definitely an elevated pride of ownership when it's
Yeah.
like, yeah, that was my fridge right there. I got to pick that one out. Or that was my countertop. I got to choose the colors.
Yeah.
There's something real special about this loan program. And one of the unique things is that during the remodel phase, if it's the remodel's more than 3 months, you get to actually finance some monthly payments, because FHA says, hey, you can't live in the house because it's under remodel, so we don't want you to have to make a mortgage payment and pay
And
rent
pay
at
that.
your old place. So they'll actually allow you to finance some payments through the loan process too.
Yeah. Oh, that's awesome.
Yeah, I
That's
have
awesome.
I'll share some photos of some successes here in
Okay.
the Boise Bench area.
Sounds good.
Yeah, definitely.
So I think we got one more loan. To
Yes.
wrap things up, the bank statement.
Oh,
Yeah, we
yes.
haven't talked to the. I'm working with a client right now with that. Yeah.
Well, you know, it being the end of the year, it's a really great time for us to talk with our entrepreneur and some self-employed buyers to help them plan how they're going to file 2024 taxes if they really want to buy a house in
Yeah.
2025.
Yeah.
And so, you know, the thing about all the loans we talked about, jumbo, FHA, VA, conventional, they all underwrite loans differently for employed and self-employed clients. So if you're an employee, hourly or salary or W-2, they look at your gross income because they know that the employer has to do withholdings. And so we look at the gross income. With a self-employed client, we can only underwrite the loans off of tax returns for those programs using their net income, right? So if you have a lot of expenses and make your $300,000 turn into $100,000, we underwrite the loan off 100. And that might not help our clients move forward with purchasing a home in the
Yeah.
price range that they deserve.
Yeah.
So the bank statement loan program is a great solution. They underwrite the loan off of your 12 months most recent bank statements. They look at your top line deposits, right? And so that is today's income for a self-employed entrepreneur buyer. As I mentioned, tax planning for 2025 purchases. When a self-employed buyer is purchasing in 2025 on an FHA, VA, jumbo conventional loan, they're looking at last year's income. What about the last, you know, if you're buying in June of 2025, what about the last 6 months? You've been doing so good.
Right.
It doesn't count.
Right.
Doesn't
Right.
count. So the bank statement loan counts that because we're going to go from June to June and use all those deposits that you put in your account as income and help you qualify for the sales price you deserve.
That's awesome. So with the bank statement, it's great that it's an option for people who are self-employed. I do find, and I would love to hear your thoughts on this, I do find that it also tends to be more expensive.
Yes, it can be.
The situation I'm thinking in my head, there was a few situations. One, the listing agent wasn't as familiar with bank statement, so there needed to be, I think, extra education on the buyer side.
Yep.
Hopping on the phone with the listing agent, saying, no, this is a strong loan.
Yep.
That we're not, like, this is not weaker for my buyer.
Right.
They have the income.
Right.
It's just formatted differently. So I think it took, on the real estate side, a little bit more educating, a little bit more communication
Yeah.
through that, just because it's not as common, I would say, of a loan.
Well, what we do, because sometimes there are unique programs coming to the table that a
Yeah.
listing agent hasn't seen,
Yeah.
like the FHA 203K,
Yeah. Yes, totally.
or the Idaho housing, or even the bank statement. It's part of my job is to help you and your client win the offer. So, strong pre-approval or an upgraded to the power bid approval are two things that are on paper can help your offer be elevated. That's my job, help you guys win.
Yeah.
But the other thing we do very often, and I have no hesitation whatsoever, is literally picking up the phone and calling the listing.
Pick up the phone.
Yeah,
Yeah.
calling the listing agent myself, not to share personal client information like
Right.
income and social security,
Right.
FICO score.
Explain
Just say,
the program.
This is the
Yeah.
I supplied this pre-approval to be submitted to you.
Yeah.
This is what the pre-approval. This is how we issued what documents we collected to issue the pre-approval. I stand by my pre-approval. I'm available to engage with you as a listing agent throughout the rest of the life of the loan
Yeah.
process.
That's huge for the listing
You know,
side. Yeah.
I take phone calls on the weekends. I help in the evenings. I'm not going to call in sick because the listing agent's being tough. You know what I mean? Like, that's just not the way we roll. So we're here, we're available, we're engaged, and we're here to help your clients win offers.
Yeah.
And so, if there was a challenge like that, I'll pick up the phone and do it. Honestly, I'll tell you something. I'll even do it on loans that I'm not even a part of.
Yeah.
I am happy
It's
to do
the long
that.
game.
Yeah,
It's the building the
Absolutely.
relationships. Yeah.
Absolutely. So the bank statement loan helps us approve a client off of today's earnings instead of that last year's look back. Interest rate wise, most clients that are purchasing with a bank statement loan are doing a 20 or 25% down payment. And the gap between a regular loan and a bank statement loan, interest rate wise, has been shrinking. I think right
That's
now
great.
it's a 0.1 or 0.2% interest
Yeah.
rate consequence, which is nothing.
Right.
Let me tell you a quick story. My best buddy from high school, he goes, Campos, I want the lowest rate loan. I want to buy this house. Tell me what I got to do.
Yeah.
And so he goes, and the bank down the street's at 6%, right? And I said, hey, you're my friend. I'm going to do everything I can. I said, okay, let's do the pre-approval first. So I look at his tax returns and I said, okay, I see what's going on here.
Yeah.
I said, Ryan, you got to go. Ryan, that's you, Ryan. You got to have this net income in order to qualify for that loan. So once you file your taxes this way, you're good to go. And so he takes it to the CPA, and this is, after a couple weeks, maybe a month or something, he calls me and says, hey, man, I talked to my CPA. We ran the numbers. The way you need money to file taxes will cost me $80,000 to the IRS to get that.
Yeah.
And he goes, the bank statement loan, although it's a higher interest rate,
Right.
it's another
How much are you saving?
$400 a month. He said,
Yeah.
I'd rather pay the $400 a month.
Definitely. Yeah. Yeah.
And so it's a great solution. Most entrepreneurs are happy about the solution because it allows them to get the home they want versus what the tax returns say, which is probably a lot less.
I love that. And I love that he did his due diligence. This is like, I'm going to reiterate something I said in the beginning,
Yeah.
which is don't make any assumptions. So,
Right.
talk to a professional lender, talk to a real estate agent, talk to a CPA,
Right.
crunch all those numbers, look at it on
Absolutely.
paper, and be like, what is the best decision financially?
It takes a village.
It does.
And we're all a part of the team. And I've been on phone calls with the client and their tax advisor more than once to just help work through these types of things. Well, how much, if we declared this much, or if we declared that much, we're on the fly in the middle of a conference call, helping the client figure out what price point he can qualify for based off of what his tax advisor was saying as well. So, and it takes a village. And so one thing we can kind of pivot on a little bit is including family in your purchase transaction. The sales prices these days across the country are going up
hard.
a
Yeah.
little bit more and more.
Yeah.
And I think parents and grandparents are starting to acknowledge that, and they just don't know. The children just don't know that there's maybe some family money available and sometimes it's 10,000, sometimes it's a lot
That's how
more.
I got my first home.
Yeah.
Yeah.
And so we, and one thing I tell first-time home buyers is that, like, don't go to mom and dad and say, hey, I need 20 grand to buy a
Right.
house. Go to mom and dad after you've been pre-approved.
Right.
Hey, mom and dad,
Be serious. Yeah.
I got pre-approved. I have good credit. I have low debt. The lender says this is the loan I can get, but I'm $5,000 short or $20,000 short. Can you participate in this well-structured, well-planned, process to buying a home? It's kind of like the movie where they do the PowerPoint presentation. You kind of need to do that when you're buying a home.
Totally.
Yep.
Oh, that's great advice. That's amazing. So I feel like that is a good conclusion on the loan programs, but I would love to have you back on here and talk more about California to Idaho. But I feel
Okay.
like that's that's a whole separate conversation that we could talk about for days. Because I'm sure a lot of people went through the home buying process in California.
Right.
And probably feel like they know the process, and then they come and maybe it's totally different in Idaho. So we'll save that for another time. But thank you so much for coming.
Yeah, you're very welcome.
That.
Thank you for having me.
Yeah.
Awesome.